We just saw the month of January close, and there are two currency pairs, the dollar Swiss franc and the dollar Canadian dollar, that are signaling a potential bullish move for the US dollar over the coming weeks. So in today's video, I'm going to show you what those markets are signaling for the US dollar and also how I'm trading them over the coming days, including what we could see on Friday during non-farm payroll. All right, so let's kick things off here with the US dollar versus the Swiss franc. And the month of January just closed up yesterday, and that's an important factor here for these markets simply because when we look at the dollar franc, this is something that I've discussed here in recent weeks. So if you guys have seen recent videos, you know about these July lows right back here. Now, this served as resistance during this consolidation below that area. It got reclaimed here on this candle, and now we saw the retest as new support. So the market bounced during FOMC right where we thought it might, and we talked about this in the VIP group, which if you guys want to join us, see the link at the top of this video, click on that link, and you will be taken to a page where you can get 70% off lifetime access. So we talk about these markets in real time, I share my trades in real time, and I also provide daily videos on 5 to 10 different markets for VIP members. So this is something that we've discussed here as well, though, for you guys who are not in VIP, we've discussed this over the past few weeks. So you can see where we got the retest down here as new support at 85.60. So as of right now, we can see that the market is holding above these lows. Now, the fact that January just closed is significant because if we look here at the monthly chart, okay, this low right back here, we saw a December close below it. So this was the monthly close below, and now we've had a monthly close back above. So if this level was going to hold as resistance, we would have seen the month of January close back below 85.60. And instead, we saw the dollar franc close above that mark and bounce from that going into the January close. Now, obviously, the market is still, trending lower highs, lower lows, and it's also still below this trend line up here. Now, we'll talk about the dollar CAD in a moment because it also did something that is signaling what could come for the dollar. Now, a lot of people ask me, what does it matter if the monthly closed above? How is that any different from the weekly or the daily chart? And the thing to know about time frames is that the higher time frames are always going to have a little bit more conviction behind them. So if you look at something like the monthly chart, each of these candles has an entire month within that candle. The same thing for the weekly chart, of course, we have an entire week within one of these candles. And you have to think of it in terms of volume traded. So on the monthly chart, there's going to be more volume traded in one of these monthly candles than there is here on the weekly time frame. The same goes for the weekly time frame where there's more volume traded within one of these candles when compared to something like the daily chart, right? So you have to think of it in terms of volume within each one of these candles. And as I often say, volume equals conviction. So the more volume you have in a particular candle or time frame, the more conviction there is behind that move. In other words, the more reliable it becomes. And one way to think about this, guys, is that trades equal votes, right? So the more votes that you have within a particular candle, the more reliable it becomes. So if every single trade, whether it be retail, banks, institutions, whatever it might be, every single trade that's made is a vote for that particular market. Market participants are either voting that it will go lower by selling, or they're voting that it will go higher by buying. And so the more votes that you have within a candle, the more conviction that you have. So you could say that trades equal votes and the number of votes equals conviction. All right, so that's one way to kind of visualize it in terms of why the higher time frames matter for these markets. Now, let's take a look at the US dollar versus the Canadian dollar. And this is another one that we've discussed here ever since it reclaimed this trend line to start the year. So you can see that off of the 2021 lows down here, we have this trend line off of these lows. We got the breakdown here at the end of 2023. And so far this year, the market has reclaimed this. Okay, so if we move in here to the daily time frame, just like the dollar franc, this market bounced right where we thought it might. So 1.337, if you watched Saturday's forecast video, this is the area that I talked about as support, and that's right where we saw the market bounce during FOMC. Okay, so this was significant because this candle right here, this green close, was also the January close. So just like what we talked about with conviction levels, right, those votes for each of these candles, there's a lot of votes here in a monthly candle like this. There's a lot of trades being made, a lot of volume, and that equals conviction. So if this level was going to serve as resistance, notice how December closed below. The fact that January closed back above is significant. Now, it's not a guaranteed thing, okay, but it does give you a lot more confidence then a daily or even weekly close above that area, which we've had here over the past few weeks. But this is the first monthly close for the dollar CAD back above that 1.337 area. Okay, now what does all this matter for the US dollar in general? And how is this going to affect even pairs like the Euro USD and the pound versus the USD? And the reason this is significant is before we even look at the DXY, the US dollar index, I want to show you these three. So this is the DXY, the dollar Swiss franc, and the dollar versus the Canadian dollar, all compared on the daily time frame going back to April of last year. And although they're a little bit different, you can see that the movement is generally the same, right? So the fact that we've seen the dollar Swiss franc and the dollar versus the Canadian dollar both reclaim significant levels on that monthly candle last month, that could be a significant factor for the US dollar in general, speaking of the DXY. And that could affect pairs like the euro and the pounds. So looking here at the dollar index, right, the DXY, we know that this market is still very sideways. There is no breakout here yet. Nothing is confirmed. Looking at pairs like the dollar franc, the dollar CAD, we know that those two have reclaimed significant areas on the monthly chart, and that could be indicative of which way this is going to break. Now, I'm kind of sticking my neck out on the line a little bit by saying that because this could still just break down below 103.10, which is the support we've talked about. Notice where the market bounced here during FOMC, and also potentially even 102.60. This down here is going to be the must-hold level for the DXY. As long as it's above that mark, then I am going to remain bullish on the dollar, which I have been ever since this reclaim to start the new year. Now, keep in mind, though, that we do have NFP, non-farm payroll, on Friday. So how could that affect some of these markets? Well, one thing to pay attention to is that during FOMC, during this candle here yesterday, this is the daily time frame, and notice how we have this lower wick right down here, right? This has not been filled at all. And we have 103.10 support. We've also got 102.60 support as well. Now, I'm not sure that we're going to get a full retest of 102.60 to sweep this low, although we still could. There's still plenty of time left for the market to do it. And again, we haven't seen a breakout here yet from the dollar. So one thing that we could see going into NFP or even next week is a fill of this lower wick from FOMC. We haven't seen that yet. So that is something to pay attention to, where we could get the DXY coming down here toward this level before bouncing. And of course, when we look at markets like the dollar franc or the dollar CAD, we have wicks that have been unfilled as well. Okay, so this is the FOMC candle here yesterday. And so far, we have not seen a fill of this lower wick down here. So that is something we could get here going into NFP. And the same thing with the dollar CAD, although we don't really have a wick like we do on the dollar franc, but still we could see a move down here into this region during NFP to clear out some early longs. And then finally, we see the bounce from there. All right, so that's just something to keep in mind there because we do have some wicks to deal with based on FOMC, and wicks like this create imbalances in the market. Okay, so you'll notice that when a market goes sideways like this, all of these wicks tend to get filled. All right, we've seen a fill of every single one of these wicks except for this one yesterday. So the fact that the market's still range bound, we have this lower wick down here, this is an area to keep an eye on going into the end of the week. But the bottom line here, though, is that even though the DXY is still sideways and we don't have any confirmation here, because as I've said recently, we do need a convincing break above this area up here on the daily chart, and ideally, even taking out these highs. We need to see a daily close up here in this area to really flip this region to new support. But when we look at pairs like the dollar Swiss franc, that monthly close that we just looked at, and also the fact that the dollar CAD also closed above a significant area on the monthly chart, when we consider these two things, okay, and the fact that all of these move together, that could be indicative of which way the DXY is going to break. And when you're trading pairs like the Euro USD and the pound, knowing that the DXY moves inversely to those, that could also assist you in positioning for trades. But I'm going to leave you with this note. Keep in mind that this right here is the one to watch. Yes, it helps that we've seen the dollar franc and the dollar CAD close above significant areas in January. That could be indicative of which way the dollar is going to break, of a bullish move here. But we need to see that confirmation from the DXY itself. I hope today's video has helped. And again, if you guys are watching this on YouTube, be sure to head over to the website and sign up, because after this week, these videos will only be available on the website. You will need to input your email address, but it's only a one-time thing. They will remain 100% free. So see the link in the description of this video if you are on YouTube. All right, trade well this week, guys. I will talk to you again tomorrow.